because I think it's extremely, extremely, extremely important that we understand what role we play. What role do we play in our economy? What role do we play in the American economy? And how do you fix it? How do you fix it? Because we have all these different ideas, and we hear a lot of stuff. We listening to the news, we listening to CNN, we listening to MSNBC, we listening to Fox News, whatever one you decide to get your news from. Some of y'all didn't go to the news outlet. Y'all go right to Facebook and get y'all news. You know, they say like 60% of the people are getting their news from social media. Please, 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 please. I don't know if that's a good thing. You know, so much stuff be going on out there. But here's what I will say. We're in a time where there's more economic prosperity than it ever was in the history of this country. You know, you hear people talking about, well, we're going to take it back, we're going to take it left, we're going to take it right, we're going to take it here, we're going to take it there. But it's more money going on right now than it ever been. I don't know what we're trying to go back to, okay? I would say, you know, in this time, we carrying computers in our pocket, you know, it's the size of the palm of our hand, okay? We used to have that going on. We have so many efficiencies and things that are happening. This is literally technologically the best time, economically the best time. Millions of millionaires are out here in America. Hundreds of billionaires out here in America. It has never been more millionaires, never been more billionaires. But if you go look at the doggone news, they'll start telling you that, you know, the economy's bad. I want you to think about this, and I want you to put it in the chat. Is the economy good? Is the economy bad? Or is it fair? How do you feel about the economy? What do you think about it? I want your honest opinion, okay? Don't listen to what I'm saying and say, okay, I'm gonna say what John said. No, I want you to put your opinion. Go ahead and put it down in there. I know I just said some things. I gave my opinion on it. We'll talk about it. But what do you think about the doggone economy? Okay? What about your economy? So I want y'all to understand a couple things. Number one, let's understand the wealth gap. Let's understand your economy. Let's understand the economy. Okay? Now, my name is John Pettiford-EL. I'm a CEO of Infinity with My Econ. I've been involved with My Econ for many years. I've been teaching people finance all over this country for many years. I know, it was the one thing I do know. I know My Econ. I know economies. I know money. I might not know nothing about anything else, but there's one thing I do know, okay? Now, I know some other things, but let's get to it, okay? Now, real quickly about us as a company, okay? Who are we? Our mission is to empower people to attain financial success by acquiring more cash flow and using financial strategies. So you need some financial strategies, and you need more cash, okay? In this country, it's, you know, person make $50,000 a year, okay? They can't afford an apartment, okay? If an average apartment, let's say it's a woman and she got her child, she needs 2 bedrooms, about $2,000. Well, you need 3 times the monthly rent, right, to be approved. So if it's $2,000, that's $6,000 monthly rent. Well, we already know that, you know, the average income, you know, how much the average person made, okay? So the average person really don't have that cash. They need a roommate. Now, that's what we need to be arguing about. I don't know if we need to be arguing about all this other stuff we going through in here in politics and somebody's laptop, somebody got a gun charge, somebody else got 91 indictments. All that stuff is fine, and I think that's stuff that needs to be dealt with. But I think the real issue, we need to be talking about how the world average person gonna live out here. That's what we need to deal with, okay? Now, we've generated over $600 million to all our associates all over this country. Now, My Econ is doing great. My Econ make money every month, but we ain't talking about what My Econ do, because you cannot spend My Econ's money. But guess what? The people that you see out here, the 51 people right now, that's going to continue to grow to over 50, 60, 70, 80 people as we continue throughout the day. Them people, they talk in terms of cash flow. Some of them is 20,000, some of them is 50,000, some of them is 100,000, some of them is 500,000. You add it all up, it's over $600 million. So we got the proof in the pudding, okay? 18-year-old company, why is that important? You ain't got to worry about if we're fly by night or we going to be around. No, you better figure out if you going to be around with us. We've been creating millionaires every single year since we've been in existence, okay? 100% debt-free. We started this company. It cost us millions and millions of dollars to put together as you see it today. So you don't got to worry about us. You got to worry about is if you getting on the train, do you got your ticket to ride? You know, there's a little song, she's got a ticket to ride. Hey, do you got a ticket to ride on the My Econ train? You better get yourself a ticket. And don't be talking about, I need to check y'all out. No, we already checked out. A+ rating with the Better Business Bureau. We've been checked and rechecked and check, TSA pre-check, whatever kind of check you want. We got it. Now let's get to it. Let's talk about this thing. Let's talk about the economy in the United States. Let's talk about where we are. Now, this ain't going to be the normal little presentation that we normally do, because I want to cover a couple things that's relevant and that's in the news that's right now going on. First of all, let's look at the unemployment rate. See, if you look at what's going on out here on the news, they start talking, okay, it is an election. If you have not heard, there is an election coming up in 2024, November. Now, I don't know who's going to win. I don't know if it's going to be, I don't know what's going to happen with this. It's up and down, it's left and right. There's a lot of stuff happening. But they saying, hey, you know, the America's economy is all messed up. Well, look at this. This is the unemployment rate. This is going back all the way back to November 2019. November 2019 was 3.6. And then as you can see, let me move this little thing out the way here. Let me see if I can do this. I'm going to move this little thing out the way because it's in the way here. Just give me 1 second. All right, there we go. All right. So now, as you can see, let's go back. Right here, it's 3.8. This is some of the lowest unemployment in the history of this country. I mean, how much more employed do you need to get? So you can see right here, you start looking at all this stuff here. You look at 2020, you look at September, you look at April, all that stuff. It was going up, right? August, that was all during the pandemic. 2021, that's pandemic stuff. Everything shot up. A lot of people wasn't working. A lot of people was laid off. But then it went back down. Now, I ain't trying to tell you about Republican. I'm not trying to tell you about Democrat. But the Republicans tell you, hey, Joe Biden messed up this whole economy. Well, I would say he kind of steered the ship. He the man in charge right now. I don't know who's going to be in charge after November 2024. But he steered the thing. It went through up, down, left, right, boom, it went back down. So I would think that's a pretty good deal. Keep that thing down below 4%. They say full unemployment was about 5% unemployed. So we way below full unemployment. We way there. We there. Let's keep moving here. Let's look at the average hourly rate. Average hourly rate, $33.82, August of 2023. This ain't last year's numbers. Well, we got last year's, but I'm talking about it's all the way up until last month. November 2019, it was 28. As you can see, for these last years, 2020, 2021, 2022, 2023, it's still going up. So I don't know what these take America back, go left. I don't know. But all I know is it is going up. Now, it's going up very slow, but it is going up. I would say it's going in the right direction. Anytime you start getting more cash flow is a good deal. That's a real good deal, guys. Now, they say the average hourly rate is $33.82. So if we do some math on that, we do $33.82, and we multiply that times 40 hours. That would be $1,352 a week. Multiply that times 4 weeks, because there's 4 weeks in a month. Last time I checked on average. That's $5,411, which would mean that person, that mother with the single parent that was trying to get an apartment for $2,000, she needed $6,000 to get approved. She can't make it. She better get a roommate. She better try to get a second job and all that. Now, what kind of person make $33 an hour? Now, this does include the people that make big salaries and all that, and people make low salaries, but we going on average. But now, what type of person make $33 an hour? I would say that's not the person that's in the entry-level job at Walmart. I'm sure they don't make $33 an hour at Walmart and you just walk in there. I'm sure you walk down to McDonald's, they ain't talking about $33 an hour. So this is a person that's probably got a little schooling. They got a little colleging. I guess colleging is something that's in your skin, in your face. I was making up a word, but then it became a word. but they got a little college education. All right. Now think about that. This person with a degree, they can't make it, but they're making more money than ever. This average hourly rate is higher than it's ever been in the history of the United States. People are making more money today than they ever have made. What we going back to? What we making it great again to? What we going to? Only way to make it greater is pay more money. But then the question becomes, where the money gonna come from? We're gonna talk about that. Where is the money? Who makes all the money? How come the average middle class family don't have much money? Let's talk about the rate of inflation. We have a big conversation about that. That's all over the place, right? All the way back to September 2019, it was 1.71. Rate of inflation about 3%. They like it around 2. They like inflation around 2, y'all. Now this is why I want to talk about this. This is important right here. Now look at what it did from 2019, 2020, 21. It started going up and up and up. And that was all during the pandemic. All in there, right? September 2022, it was upwards to as much as 8.2%. June 2022 was 9.6%. But now it's back down. Inflation went down, but your prices stayed up. Prices stayed up. Now they say Joe Biden messed it up and all this. Well, I don't know. All I know is what the numbers say. I don't care about what his son doing, what he did, and all that. All I care about is what this thing say right here. This thing say inflation is down. But the business owners, they just start raising the prices more, but they kept them sky high. Because we live in a system called capitalism. And in capitalism, you sell something based on what the market will bear, meaning what people will pay for it. And if they keep paying for it, they keep the prices high. Last time I checked, when I was in the airport, it was people wall to wall going everywhere. They was going to Acapulco, they was going to Mexico, they was going to the Europe, and they was going to this, and they was going to Vegas, and they was going to Orlando. Nonstop. The plane was full. So why would they take the prices down? They say it was the records, the numbers are above pre-pandemic now, as far as travel is concerned. The average vehicle, automobile, person go buy a car today is $48,000. That's the highest it's ever been. But ain't nobody stopped buying. They still selling cars like it's going out of style. Because people just say, well, I can do anything on a payment plan. They get out here and they say, whoop, just give it to me. Whoop, there it is. $400 a month, $500 a month, $600 a month, $700 a month. No problem. I just figured out. So why would they lower the price of cars? People still buying homes today. Interest rates are high because they was trying to slow this. See, here's how this inflation slowed down here. They started raising interest rates over the last year. So September 2022, they started raising interest rates. And as interest rates went up, they slowed things down, but it still continues to be robust. This is the most robust economy. Ain't nobody stop buying. We're not in a housing crisis where everything just dropped out the bottom and the economy just stood still. Now, how did this inflation get so high here in 2022? You started having people that had a surplus of money. They weren't going anywhere. They weren't driving. They weren't spending money on goods and all that kind of stuff that they started buying other little things. They're doing services and all. They was doing all kind of little things. And they started spending that surplus. I think the average savings rate was upwards to like 30% or something like that in this country, which ain't never been that high. Meaning people are saving or not spending about 30% of their money or more. It got really high. Now it's back down. They spending upwards to 98% of it now. Plus. So you got these people with all this money. They start buying a whole bunch of stuff coming out of the pandemic. And now you had what they call a supply chain shortage. People wasn't making all those goods, so now it's called supply and demand. It's very little supply, but it's very, very much of a demand. So it's a whole lot of people that got money to spend. They had cash in hand. So they start buying up stuff. That's why when you went to the store, wasn't nothing in there. And that started to push the prices higher because it was a greater demand. That ain't got nothing to do with the president. They ain't got nothing to do with the president. I'm gonna say it again. They got nothing to do with the president. And I hear people, they on social media, they saying, ooh, Joe Biden, he made the prices of gas high. He made the price of this high. Well, wait a minute. Inflation shot up everywhere. If you go look at inflation in Europe, if you go look at inflation in Australia, it's 11%, 12%. So wait a minute, Joe Biden, he shot inflation up all over the world? But people that, well, when you don't understand, you'll be like, you listen, you hear somebody say something as a talking point, and they say, oh, yeah, that president. The president ain't got nothing to do with what's going on over there with the economy in Italy. Joe Biden is not in charge of Italy. He ain't in charge of the UK. All of them, worldwide, inflation was up because it was all the same problem. So don't get fooled by hearing crazy little talking points. Just get out here, study and show thyself approved. We're destroyed for a lack of knowledge. If you don't understand finance, you're going to get destroyed financially. Let's keep moving. Let's talk about this wealth gap. The top 1%, look at how they make their money, guys. See, down here in red, that's the middle class. We talking about the UAW, they got all this stuff. That's the middle class right now, right? The UAW, they on strike. Thousands of people, they on strike right now. Now remember when we talked about the average hourly wage. If I take it all the way back, so this started in 1970, and they go to 2020. You see that line, that red line, it moves, but not very much. Look at where we were for the last 5-6 years with the average hourly rate. It moved, but not very much. If I take it all the way back to 1970, yes, people are making more money, but because of inflation, they never got a pay raise. It's just they kind of just there. They making a living. They're able to buy a house. They're able to buy a car. They're able to put food in the refrigerator, all these little things, but their income ain't growing like exponentially. You got to figure out how to grow exponentially. So my question to you today, this morning, how are you going to grow exponentially? Now look at the 1%. They make different decisions. They take risks. They take risks by starting businesses. They take risks by investing. They invest in things. They grow businesses. The middle class, they grow their income, meaning they grow their income on a job. Their only plan is say, all right, I'm going to go get me a degree so I can work at this company in this industry. Well, that's all cool because you need to make a living. But here's the problem. There's no compounding going on there. If you want to compound, you got to figure out something else. You got to get some leverage income somehow. And you can only leverage two things. You get leverage income in business by using leverage systems and leveraging people. And you can leverage money by investing. But if you don't do them two things, you're not going to do what your income not going to do what that top line is doing. It can't do that. And Joe Biden can't legislate that to you. They can't make a law that say, all right, we're going to transfer this wealth from these 1% here. This is going to transfer to that red line. I seriously don't think that's going to happen. That's not going to happen. And see, look all the way to the right. Look at the gap between the two, the wealthy and the middle class. You already hear that says the wealthier are getting wealthier, or the rich get richer and the poor get poor. They're getting further and further divided. So in this country, it's more of you got it or you don't got it. Now you got to choose where you're going to play. Because you do got a choice. But you can't be waiting on the job to legislate it to you, or the government to legislate it to you, or the job definitely ain't going to shift it all over to you. Say, ooh, we just like you. We feel good about you. And we're going to just give you some wealth. We're going to pay you a whole truckload of money. That ain't going to happen. Not going to happen at all. Matter of fact, they try to figure out how to get rid of you. They try to figure out through cutting costs. They try to figure out through using AI right now. AI might just doggone get rid of you in the next 18, 24 months. You better get another plan in order. Because remember, your job has a fiduciary responsibility to the shareholders, not to you. Because see, the job never said, we started this business so we can make sure you got a place to stay. You got enough money to pay your own bills. They didn't say we started this company so you could have a car, but you went and got one. Nothing wrong with having one. Nothing wrong with having a house. But to understand the job's responsibility is not to pay for it. It's your responsibility to figure out how to pay for it. See, we got this thing kind of mixed up. We got this thing kind of upside down. There ain't nothing wrong with working, y'all. But if you don't understand the part you play in America, if you don't understand where you at, you might get lost in the sauce, as they say. Let's continue. Wealthy people make most of their income from businesses and investments. Middle class people make all of their income from a job. They have very little businesses. They don't have any businesses at all to speak of, most cases. And they have very little investments. They don't take any risk. If you don't take no risk, how your income gonna be exponentially growing? The person that takes the risk should get the most gain. Now, let's talk about CEO pay. Let's talk about CEO pay. I'm going to say it again. Let's talk about CEO pay. I'm going to play this if I can get this thing to play. Let's see if I can get this to play.
Union is demanding, I think, for a 30% wage increase over 4 years. I'm asking for that in part because they say CEOs like yourself, leading the big three, are making those kind of pay increases over the course of the last 4 years. You've seen a 34% pay increase in your salary. You make almost $30 million. Why should your workers not get the same type of pay increases that you're getting leading the company? Well, if you look at compensation, my compensation, 92% of it is based on performance of the company. I think one of the strong aspects of the way our compensation for representative employees is designed is not only are we targeting a 20% increase on the table, we have profit sharing. So when the company does well, everyone does well. And for the last several years.
All right. Now, there's some key things that she said there. First of all, I don't know why this employer, this journalist asked that little crazy question. Should your employees get a 40% pay raise like you did? Well, first of all, the employees ain't doing exactly what she do. They do two entirely different things. Her job is to run a business. The employee that's on the line, their job is to put a part together. Her job is to grow that company. So my question is, I'm just asking a real crazy question now. What did the person on the line do to grow the business? What decision did they make to make the company grow? And another thing that she said when she answered that question, she said, my income or my is based on 92% performance. Performance. I mean, something got to happen. Some results got to happen. And then because of them results, it triggered income increases. Now, over the last 8 years, they done paid her about $200 million. Now, people, they argue, they say, well, person don't need that kind of money. Well, I bet if somebody decided to pay you $200 million, you say, yeah, I'll take it. And that had to be approved by the board. So a group of people have approved her to get this money. Because they have a fiduciary responsibility to who? The investors, not to the employee. The employee is great now. I'm not saying the employee don't even need some kind of cost of living raise, all that. I think that's fine. That's good. But let's continue with this. See, we got to continue with this conversation because, if you don't understand what's happening here and why does she make this kind of money, she got ownership in the deal. I'm going to prove it. It's about ownership. So let's look at Mary Barr by the numbers. Her salary was unchanged at $2.1 million. Option awards increased 24% to $4.9 million. And non-equity incentive compensation declined 18% to $6.3 million. Now, this is the key right here. Stock awards, which account for the majority of Barr's compensation, increased to $14.6 million. That's stock compensation. That's called equity. That's called ownership. That's ownership in the business. That's not income like, salary. Basically, they just cut you a check on your paycheck every 2 weeks. Most of that came from ownership, equity. So my question is, okay, what kind of ownership do the middle class have? Remember what I said? They own very little businesses. They own very little investments, means they have very little equity, but they said, hey, give me a 40% raise on my check next week. It don't work like that, folks. It don't work that way. Now, let's talk about what she did. Let's look at GM's performance by the numbers. See, this is clear to me. And I'm going to prove to you that the company cannot afford to pay 40% more money to all the workers and take their work week from 40 hours a week to 32. So work less and make 40% more. That ain't going to fly. That'll bankrupt the company. And her responsibility is not to bankrupt the company, it's to grow the company. So I think she took over around 2012, 2013, something like that. So from 2010 to 2022, look at the numbers. Round here in 2014, it was up to $155 billion in revenue. That was GM as a company. It took a little dip in 2015, raised back up in 2016, took a dip in 2017. By the time we got around here to 2022, it's as high as it's ever been. GM as a company is making more money in the history of its existence today under her leadership, with her in charge. Whether you like her, whether you don't like her, that's where they're at. And of course, it was written in the contract based on growing the numbers, growing the revenue as a company, top line and bottom line. It triggers options, ownership in this business that she is guiding and at the helm of and leading. She should get $29 million. Now, I know that's a very, very, very what they call, that's one of them statements that, that it's a controversial deal. But it's only controversial if you ain't the one getting the $29 million. I bet you if your job came to you and said, we're going to give you $29 million, you will be talking about, oh, no, I don't really need that kind of money. No, you'll say, all right, here's my bank account, direct deposit. Here's where you can send my stock options. Boom. Let's keep moving. Let's look at the performance numbers here. Earnings trend. GM has become profitable over the last 5 years. So that was the top line that we just looked at. Growing earnings by 17.2% a year. So she growing how much money they actually make as a company by almost 18% for the last 5 years. Accelerating the growth. GM's earnings growth grew over 31% in the last 5 years versus the industry average of 18.4. So if we compound that, we do 4 years on average at 17.2%, and then take the last year at 31%. Her compound growth is over 148%. So she grew the bottom line by over 148%. She drove shareholder equity because the more company that GM make, whoever owns the stock, whether it's the employee. Now, what the employee should have, now, if they want to participate, they should have bought some stock. They would have got paid too. They would have got paid too. But they was waiting on somebody to get them something. Now, I don't know what's going to happen with this strike. But I'll tell you one thing. I would venture off to say that most people that work in the factory, they kind of learn their little station, and that's all they learn. They don't learn nothing new. They don't learn nothing to really grow the company. They say, I just do my job. I ain't doing nothing extra. I'm just doing what I'm told to do. And they get in their little cubicle lane, and they put their little part together. And then they say, woo, this company making all this money. I want some too. Now, they already gave you the profit. They gave some profit sharing to you. And then you turn around and say, look, I want to work 8 hours less a week, and I want 40% pay because the CEO makes more money. I don't know what kind of sense that makes. Let's take a look at it. Let's take a look at the UAW proposal. Mary Barnes, her stuff increased by about 14 million. Now, why do I got that little red 400 over there? Because I want you to see something. Let's say the average employee, their salary grew by about $35,000 a year. Let's say that was a 40% increase on them. So if we take $14 million, what she made, and we divide that by the $35,000, that's 400 people. That's equivalent to 400 people getting $35,000. But what the UAW is saying is, let's give $35,000 to over 125,000 employees. They say, well, hers went up. Everybody need to go up 40%. Do you understand that's a payroll increase of $4.375 billion? Where that money gonna come from? Hey, I ain't working 5 days. I'm only working 4, and I want you to increase the bottom line payout by $4 billion. Her job is not to go pay out $4 billion more dollars. She's trying to make the company more profitable. This make the company less profitable. It will be against her interest to agree to something like this because it might put the company out of business. Now, they did agree to 20%. That's very generous. It's very generous. And they say, no, we don't even want that. We want 40% or nothing, and we going on strike. And then they saying, we gonna cut y'all off at the knees. We going on strike. Now they mess around and had a company bleeding. They mess around and had a company go out of business with this foolishness. Now don't nobody get a check. But people that don't understand it, they say, woo, yeah, 40%. Don't give me 40%. Do you understand what you're asking for? If you don't understand business, you think all that just makes sense. The 40% is going to drop out of the sky, whoop, right in your bank account. It don't work that way. And remember what I said. This is real cash going into direct deposits. Hers was stock options. It was equity. And then when she exercise it and sell it, then she get the money from the market, not out of the payroll deal. And so, see, business people, wealthy people, they get paid differently. What you got to do is you got to say, I got to change the way I get paid. You got to change the way you get paid. You can't say, I'm going to stay in this lane. I only want to be the same. I'm only going to do what I've been doing, but I want high results. I want big differences. No, it doesn't work that way. If you don't change, your life will not change, your finance will not change, and nothing will change. Now let's take a look at this. Remember, I was talking about all the way back to 1970. So this is called compounding. This is why the wealthier get wealthier. This is why the rich get richer. They have assets, they own things, they have equity that can compound. Incomes and salaries do not compound, cannot compound, will not compound, and you cannot compound. But if you had $5,000, let's say somebody passed away, they left you $5,000 in 1970. You drop that into the S&P 500 and you just let it sit there. To 2023 today, you got over, it's $1 million sitting there. This don't even take into account what were they investing and saving over these last 50 years. See, it would be millions of dollars in your family if you just made a decision. If somebody just make a decision to buy some equity, if somebody make a decision to not just focus on salary, hey, let's build something, let's grow something, let's own something. Take a look at this. That's a 21,655% growth. Did you hear me? 21,655% growth, over 10% a year. You can't grow your income on it. UAW can't get that. I don't care what company you work for, they ain't trying to give that. Let's have somebody pass away. They leave $150,000 to you. Instead of you going to buy a car, instead of you going to buy a house, let's take it and buy some assets. Let's buy some equity. Let's buy something that could grow. Let's put $150,000 down in the S&P 500. Let's let it sit there. Your family got $32 million. Now, how many people passed away and got $100,000 in the last 50 years in your family and didn't do nothing with it? They bought something that make them look good, though. Do this about 8 to 10 times over the last 50 years. Your family got $100 million today. But y'all ain't got the $100 million because, see, we waiting on somebody else to legislate. We waiting on a new election. We waiting on a Democrat to do it. We waiting on a Republican to do it. We waiting on the UAW to do it. We waiting on whoever you work for to do it. Hey, when y'all gonna do? No, when you gonna do? When you gonna do? Guys, see, we gotta change. Yes, please go vote. Yes, we got to preserve whatever we can in this thing called a democracy. This is an experiment called democracy. And I don't care what nobody say. They complain about all the problems we got in America. We got a whole truckload of them. But I bet you they don't want to go live nowhere else. Because if you think it's bad here, just go somewhere else. If you think, oh, this thing, just go somewhere else. I guarantee you, you'll be ready to get back over here. Now, why is my econ your best investment? See, let's start growing. Let's start compounding. I ain't got but 5 minutes left on this thing. Year one, let's get in here. Let's run our system. We ain't trading on all this today, but this is how our system works. Okay? W4 correction. Get an extra $4 a month. That's cash flow. That is a strategy that we teach. Okay? Invest. Take that money. Drop it into your investment account. 401k, IRA. Let's get a little return on that. Let's buy some equity. Let's get some ownership. Let's get some tax savings because you joined a biz with us. Quit paying all them taxes. Now we show you how to lower your taxes by over $1,200 by getting $5,000 in deductions. Let's make a little bit of income. Now we're gonna talk about making a whole bunch of income today. Let's make a little bit of income. You ain't got to be a superstar, but look at this. Boom. First year cash flow. Look at your first year. Okay, look at your return on investment. 500%. You growing your money. Total capital, 7,700. Year two, let's keep going. It starts over again. It keeps moving. Look where we at. Look at what's happening here. Take out our $500 for running the business a year. Look where we at. Total cash flow. Total, look at this, 1,100%. Remember, we got to get to them thousands of percent returns. My econ is doing it. We showing it to you. We got a system for it. You ain't got to wait to see who get elected. You ain't got to see who running Congress. You ain't got to see who running the Senate. They all 95 years old and don't know nothing about what's going on out here. You better get yourself straight. Total capital, $1,500. Now look, you done turned a few $100s into thousands of dollars. What if you get out here and get to building? Teach your people this process. Look at 1,800% return. You turned a few $100 into 23,000. This is how Oprah Winfrey became a billionaire. This is how Mary Barr's growth on her asset. That's what it looks like. This is how it works. Elon Musk, he the richest man in the world. Why? He owns businesses. People saying, they say, ooh, we don't need no billionaires. Yes, we do, because I want to be one day. We don't even talk about we don't need no billionaire. You crazy? No, I want a shot. And they say he did something wrong. He built 2 or 3 companies. He started a company called X whatever it was back in the 90s. It became PayPal. He sold that to eBay. He made $100 million. He built a company. Then he turned around, took that $100 million, all he had, dropped it into 2 companies. One of them called SpaceX, the other one called Tesla. SpaceX is worth about $200 million today. I think 200 million. And then that thing called Tesla, that's worth about 800 billion. He owned about 20% of both of them. So something was wrong with that? No, that was a good thing. The market dictated that those were good companies. The SpaceX got government contracts. Tesla selling electric cars because people want some. Stock went up. Now he got 250 billion with a B. What's wrong with that? Nothing. Why don't you get you some ownership? Why don't you own 100% of a business in my econ? Grow that thing. Do you understand that a business in my econ is worth 10 times what it make you in a year? Asset value, asset value, asset value. Keep going. Look at your money. Look at your money. Look at your money. You turn a few $100 into 32,000. Do this 100 times. Do this 1,000 times. 5 years out. Now, let's build $1 million asset. There are so many people in this country that need what we do here at My Econ. Let's go out here and build an active team of 1,000 people. Some of them going to be on our core membership of $39.95. Others are going to be on the $49.95 membership. You're making $9.30 on 750 of them. 250 of them, you're making $13. You're making $10,000 a month passive residual income. See, what's your other plan to go make $10,000 a month income passive? This income comes in no matter what you do, where you go, what you say, who's the president. Long as they don't nuke and blow everything up, this money keep coming in. 20% of them people going to be active workers, make another $1,000 here. Boom. Let's have some products. Got to have some products to sell. Remember, you're a business owner now. You got some ownership. You got 100% ownership in what you build here. You're also taking some money and invested in the previous slide, so you own that. That's growth. That's leverage income. This is leverage and passive income here. Now you're going to make $170,000 a year. This is worth 10 times what it makes you in a year. This is $1.7 million. You can become a millionaire in the next 12 months. You can become a millionaire in the next 24 months. You can become a millionaire in the next 5 years. And you ain't got to wait on no UAW. You ain't got to wait on no presidential election. Because the UAW ain't going to make you a millionaire anyway. So at the end of the day, ladies and gentlemen, you got to decide to become an owner. You got to decide to become an owner of equity. And you got to do it 2 ways. You got to become a business owner while you're working your job. You got to go and take some money and invest it, so you start owning a piece of these companies. We call it own a piece of America. And you grow your wealth that way. You grow your wealth that way. Let the government do whatever they do. Let your job and the union do whatever they're going to do. But they can't save you. Matter of fact, I would venture off to say it's probably not their job to save you. It is your job to save you. We have the best opportunity on the planet called My Econ. And we got the vehicle that can give you everything you need. So I thank you for listening to my class this morning for the last 46 minutes.